Imagine a switch. It is not a physical lever on a wall. It is a line of code, a digital command sitting on a server in a data center you will never visit, controlled by people you will never meet. When that switch is flipped, your life stops. I do not mean your heart stops beating. I mean your ability to participate in the modern world evaporates. Your credit card declines at the grocery store. Your mortgage payment bounces. The gas pump screen reads "See cashier," but the cashier tells you your account has been flagged. You open your banking app, the one you trust with the fruits of 40 years of labor, and you see a zero. Or worse, you see your balance, but the transfer button is grayed out. You have not committed a crime. You have not been charged. You simply fell on the wrong side of an algorithm, or a political mandate, or a banking liquidity crisis. For decades, we have been sold a lie. The lie is that money in the bank is your money. It is not. Money in the bank is an unsecured loan you have extended to a financial institution. It is an IOU. And in the history of finance, IOUs have a nasty habit of becoming worthless precisely when you need them most. We are moving at breakneck speed toward a cashless society, a world where every transaction is tracked, traced, and permissioned. But there is a way out. There is a fortress you can build that no algorithm can breach. It is called the Unfreezable Portfolio. It is built on the oldest financial concept in human history, the bearer asset. If you are watching this, you likely sense the ice cracking beneath the feet of the global economy. You worked for your wealth. Now, you need to know how to keep it. I want to know who I'm talking to today. In the comments below, tell me where you are watching from and if you have noticed cash disappearing from your local businesses. Let us begin. The year is 1933. The location is the United States of America. The Great Depression is ravaging the heartland. Panic is the only currency with high velocity. To stop the bleeding, President Franklin Delano Roosevelt signs Executive Order 6102. With the stroke of a pen, the ownership of monetary gold by U.S. citizens becomes illegal. The government did not kick down every door. They did not have to. They simply made it impossible to use gold within the financial system. They threatened imprisonment. They closed the banks, and the people, terrified and law-abiding, lined up to hand over their life savings in exchange for paper currency. Paper that would lose 98% of its purchasing power over the next century. Sound familiar? Fast forward to 2013, Cyprus, a modern European nation. The banks failed. Did the government bail them out? No. They executed a bail-in. They seized a percentage of depositors' funds directly from their accounts to save the institution. People went to sleep with a retirement fund and woke up with a haircut they never agreed to. Sound familiar? Fast forward again, February 2022, Canada, a G7 nation, a beacon of democracy. The government invokes the Emergencies Act to quell the Freedom Convoy protests. They did not send in tanks first. They sent in the banks. Without a court order, without due process, personal bank accounts were frozen. Credit cards were disabled. Car insurance was suspended, not just for the protesters, but for anyone who had donated as little as $20 to the cause. The mechanism of control has evolved. In 1933, It took a presidential decree and the threat of jail. In 2013, it took a banking holiday. In 2022, it took a software update. The window between freedom and financial exile is shrinking. The terrifying reality of the modern financial system is that you are only allowed to spend your own money as long as you remain in good standing with the issuer of that money. The threat we face today is not just inflation. We all know the dollar is dying. The consumer price index is a manipulated statistic designed to hide the theft of your purchasing power. We know that the U.S. debt to GDP ratio has crossed 120%, a mathematical point of no return. But the immediate threat, the one that keeps the wealthy awake at night, is not the devaluation of the asset, it is the freezing of the asset. Traditional assets like stocks, bonds, ETFs, savings accounts are all intermediated. They live on a ledger. They require a third party to say yes every time you want to move them. If you own Apple stock, you do not actually own Apple stock. You own a digital entry at a brokerage, which holds an entry at a custodian, which holds a claim at the Depository Trust and Clearing Corporation. You are 4 layers removed from your property. If that chain breaks, or if that chain is locked, you own nothing. This is why we must pivot. We must return to the concept of the bearer asset. A bearer asset is a physical instrument. The person who holds it, the bearer, is the owner. There is no name on it. There is no database tracking it. There is no counterparty liability. If you have it in your hand, it is yours. If you lose it, it is gone. This sounds risky to a generation raised on password recovery questions and FDIC insurance. But in an era of digital authoritarianism, the risk of loss is nothing compared to the risk of confiscation. History is a circle. Those who held physical gold in 1933 outside the banking system preserved their wealth. Those who held physical cash during the Great Depression bought real estate for pennies on the dollar. Sound familiar?
We are approaching another turning point. The digital cage is being constructed around us. Central Bank Digital Currencies, or CBDCs, are not just a new form of money. They are a surveillance system masked as a currency. They are programmable. They can be set to expire. They can be restricted geographically. They can be turned off if your carbon footprint is too high or your political views are too loud. This is not a conspiracy theory. This is the stated goal of central bankers discussing programmable money at the Bank for International Settlements. But the receipt for survival is wilder than you think. It requires us to step back in time to move forward in safety. Let us talk about the mechanics of the trap before we build the escape. Most people between the ages of 45 and 65 have been trained to follow the 60-40 portfolio, 60% stocks, 40% bonds. It worked during the great moderation of the last 40 years. But that model relies on a functioning bond market. It relies on low inflation, and most importantly, it relies on the sanctity of property rights. When the repo market seized up in September 2019, the Federal Reserve had to print billions overnight to keep the plumbing of the financial system from exploding. That was the tremor before the earthquake. The system is fragile. To survive the coming freeze, you need a portfolio that exists largely outside of the electronic grid. This is the Unfreezable Portfolio. This portfolio is not designed for number go up. It is designed for number stays yours. There are 3 pillars to this survival strategy. Pillar number 1, the king of bearer assets, gold and silver. This is not about buying a paper ETF like GLD or SLV. If you buy paper gold, you are buying a claim on gold that may or may not exist in a vault in London. In a crisis, paper claims are settled in cash, not metal. You cannot eat cash settlements when the currency is collapsing. You need physical metal, sovereign coins. Why sovereign coins? Why American Eagles, Canadian Maples, or British Britannias? Because they are recognizable. In a survival scenario, you do not want to be arguing with a merchant about the purity of a generic bar. A government-minted coin is trusted instantly. Let us look at the numbers. Since the year 2000, gold has outperformed the S&P 500, but that is irrelevant. The statistic that matters is 0. 0 is the number of times physical gold has defaulted in the last 5,000 years. For your unfreezable portfolio, you need a mix. You need gold for wealth density. You can fit $250,000 of gold into a small tube that fits in your pocket. This is your bug-out wealth. This is the wealth you use to bribe a border guard, buy a farm, or restart your life in a new jurisdiction. But you cannot buy a loaf of bread with an ounce of gold. For that, you need silver. Specifically, you need junk silver. These are US dimes, quarters, and half dollars minted before 1965. They contain 90% silver. They look like money because they were money. In a grid-down scenario or a hyperinflationary collapse, these small fractional units of silver become the primary medium of exchange for daily goods. They are indistinguishable to loose change to the uneducated eye, making them excellent for gray man stealth. Pillar number 2, the ghost in the machine. We have to address the digital elephant in the room, Bitcoin. I know many of you in this demographic are skeptical. You see it as magic internet money, a Ponzi scheme, or a toy for millennials. You need to look closer.
I am not talking about trading crypto on Coinbase. If your Bitcoin is on an exchange, it is freezable. It is just another bank account. I am talking about self-custody. When you hold Bitcoin on a hardware wallet, a device like a USB stick that never touches the internet, you are holding a bearer asset. You possess the private keys. Those keys are just a string of words. You can memorize them. This means you can cross any border in the world with $1 billion in your head. No metal detector can find it. No customs agent can seize it. No bank can freeze it. It is the only asset in human history that is both unseizable and instantly teleportable. In a world of capital controls, where governments prevent you from moving your money out of the country, look at Lebanon, look at Argentina, look at China, Bitcoin is the wormhole. You do not need to put your life savings into it, but having 1 to 5% of your net worth in a bearer asset that can be transmitted over a radio wave is not speculation, it is insurance against tyranny. Pillar number 3, productive land and tangibles. You cannot freeze a farm. You cannot freeze a water well. Real estate is often considered a safe haven, but be careful. Property taxes are the rent you pay to the government for the land you think you own. If you cannot pay the tax, they take the land. However, in a high inflation environment, productive land, land that produces food, timber, or energy, is superior to a suburban house. But let's go smaller. The unfreezable portfolio includes things the system ignores: a high-quality generator, a water filtration system, a store of shelf-stable food. During the hyperinflation in Weimar Germany, a silver link from a necklace could buy a week worth of groceries, but a bottle of vodka or a carton of cigarettes could do the same. These are trade goods. They are bearer assets of utility. Now let's talk about the action plan. How do you construct this without triggering the very alarm bells you are trying to avoid? The banking system tracks structuring. If you withdraw large amounts of cash or buy massive amounts of gold all at once, you generate a suspicious activity report. In the United States, any cash transaction over $10,000 triggers a CTR, or currency transaction report. But banks often file SARs for much less, sometimes for withdrawals as low as $3,000 if they deem it unusual. The key is consistency and patience. You must become your own central bank, but you must do it quietly. Start by allocating a percentage of your monthly income to physical accumulation. Dollar cost average into gold and silver. Go to a local coin shop. Pay in cash. When you pay in cash for metal locally, there is no digital trail linking that metal to your identity. This is crucial. If the government decides to repeat 1933 and confiscate gold, they will look at the digital receipts of major online bullion dealers. They will not knock on the door of every person who bought a coin with cash at a local swap meet 5 years ago. Anonymity is your armor. Store it properly. Do not put your bearer assets in a safety deposit box at a bank. A safety deposit box is inside the jurisdiction of the bank. During bank holidays, the doors are locked. You cannot access your insurance when the house is burning. You need a safe at home, bolted to the floor. You need diversion safes. You need holes in the ground in places only you know. Let us look at the numbers again. According to recent data, the purchasing power of the US dollar has declined by nearly 20% in just the last 3 years. That is the official number. The real number, based on the cost of living, is likely double that. If you had $100,000 in a savings account in 2020, you effectively have roughly $70,000 of purchasing power today. The system did not freeze your account. They just evaporated 30% of it. That is the soft freeze. The hard freeze is what we saw in Canada. The unfreezable portfolio protects against both. Gold and productive land hedge against the soft freeze, which is inflation. Physical possession and self-custody hedge against the hard freeze, which is confiscation. There is a psychological barrier you must overcome. It is the fear of taking responsibility. When your money is in the bank, you feel like it is someone else's problem to keep it safe. When you hold a bearer asset, the safety is entirely up to you. If you lose your gold coin, there is no 1-800 number to call. If you forget your Bitcoin seed phrase, there is no reset password link. This responsibility is the price of freedom. The generation before us, the ones who survived the wars and the depressions, understood this intuitively. They did not trust systems. They trusted substance. They did not trust promises. They trusted what they could hold. We have become soft. We have been lulled into a false sense of security by 50 years of relative stability. But look around you. Does the world look stable today? Geopolitical tensions are at boiling points. Supply chains are fracturing. The bond market is screaming warnings. The BRICS nations are accumulating gold at a record pace, preparing to challenge the dollar's hegemony. Central banks bought 1,136 tons of gold in 2022. That was the highest level of net purchases on record, dating back to 1950. Do you think they know something you do not? They are building their unfreezable portfolios. They are moving out of U.S. Treasuries and into physical bars. They are de-risking from the dollar system. You must do the same on a personal level. The action plan for you, starting tomorrow.
Step 1. Calculate your ratios. How much of your net worth is digital? If it is 100%, you are incredibly vulnerable. Aim to move 5 to 10% into physical bearer assets within the next 6 months. Step 2. Establish a relationship with a local bullion dealer. Walk in, shake their hand, buy a few silver rounds, learn the process. Step 3. Educate yourself on self-custody. Read about hardware wallets. Understand the difference between a hot wallet on a phone and a cold wallet in a safe. Step 4. Assess your liquidity. Keep enough physical cash on hand to run your household for 3 months. If the power grid goes down or the banking cyber attack hits, credit cards are useless pieces of plastic. Cash is king when the lights go out. We are entering the age of the Great Reset. You have heard the slogan, "You will own nothing, and you will be happy." That is not a prediction. It is a marketing campaign for a subscription-based serfdom. They want you to rent your house, lease your car, and subscribe to your food delivery. They want every interaction to be mediated by a digital token they control. The bearer asset is the ultimate rebellion against this future. To hold a gold coin is to say, "I own this, I earned this, and you cannot take it without force." To hold your own private keys is to say, "I am my own bank." This is not about becoming a doomsday prepper living in a bunker. This is about being a prudent, sophisticated investor who understands counterparty risk. The wealthy families of Europe, the ones who preserved their fortunes through 2 world wars, the rise and fall of empires, and hyperinflation, did so because they understood the unfreezable portfolio. They held art, gold, land, and diamonds. They kept their wealth quiet, mobile, and physical. Today, we have better tools, but the principles remain the same. The danger of denial is the greatest risk you face. It is easy to say, "It cannot happen here." But ask the people of Venezuela, ask the people of Lebanon, ask the truckers in Canada. It can happen anywhere, and when it happens fast. By the time you see the news headlines about capital controls, it is already too late to get your money out. The doors close before the fire alarm rings. The year 2026 is shaping up to be a pivotal moment.
The rollout of major CBDC pilots in the US and Europe is scheduled around this timeline. Once the digital dollar is the only option, the ability to exit the system quietly will be gone. You have a window of opportunity right now. The exits are still open. You can still withdraw cash. You can still buy metal anonymously. You can still self-custody digital assets. Do not let this window close on your fingers. We are building a community of people who value truth and freedom over convenience. If you want to navigate this transition with your wealth intact, you need to stay informed. Hit that subscribe button, not because I need the metrics, but because you need the unfiltered truth that the mainstream financial media will never tell you. Secure your assets. Secure your future. I will see you in the next video.